Welcome to the Great Scott Show, where homes, hearts and hometowns come
a great
together.
place to validate
Hosted by a local
But I also
expert
find-
and friendly neighbor, Adam Scott from Great Scott Homes. Each week we chat with the people shaping our community. From
Talk
real
this year.
estate to real talk,
We are
it's
100%
all right
behind
here.
her.
Let's get started.
Good afternoon, everybody, and thanks again for tuning in to the Great Scott Show here on 88.7 Cove FM. Thank you very much for taking a chance to listen to me today. We got a great show coming up today with special guests from Scotia Cycle on the Great Scott Spotlight. But before we get to that, of course, I have the Great Scott Report to review with everybody. And today, we're going to talk about I'm going to talk about the Halifax market and what we should expect from spring and summer. I know it's a little early, but it is important to get these things in our mindset before we head through the spring season. So today is all about the Halifax market, HRM in general, and then next week, actually, I'm going to talk about South Shore as well. It's important to separate these two markets, but it's also very important to talk about HRM because it's the beacon. It's what sets the tone for real estate throughout the province, and it's what the rest of the country focuses on when they're reading up on real estate here. So lots of information here, and stick with me as I go through it with you. So as of mid-February, the single-family home market in HRM, it's doing exactly what it typically does this time of year. We're in that winter phase where the seasonal price floor is being set. Activity slows, buyers hesitate, and sellers wait for spring. But here's what matters, and this is important. The core metric driving this market right now is 1.9 months of supply. And I'll get into a little bit about what that is shortly here, but that number tells us a lot. So here we go talking about it. What does the 1.9 months of supply mean? Well, in real estate, we look at something called month supply. A balanced market typically sits between 4 and 6 months. A balanced market typically sits between 3 and 6 months, and we are at 1.9. That means if no new homes are listed, everything currently available would sell in under 2 months. That's not a crash setup. That's not a buyer's market. And that's a market with structural scarcity. Inventory is higher than the extreme pandemic lows, yes, but it is still well below balanced. And that creates a buffer, and buffers prevent sharp price drops. So here's a current price snapshot. The average sale price for a single family home in the HRM right now is approximately $620,000. That's a 2% increase compared to January 2025. So some people see winter softness and assume weakness, but historically, you got to remember, January always cools. The winter months are a cooling season. January, it's a reset month. But when we look year over year, we're still up. And historically, from winter into spring and summer, Halifax tends to see a 3 to 5% climb. Some projections actually even suggest a 6 to 7%. So the dip we're seeing isn't a correction, it's seasonal behavior. The sale to list ratio is averaging around 97%. What that means, sellers are still keeping the vast majority of their asking price. We're not seeing widespread price cutting. We're not seeing desperation listings. We're seeing negotiation, but we're seeing balanced negotiation. So let's talk about why I believe we're positioned to climb. Let's talk about why this market may strengthen into spring. And there are 4 big drivers. The new 2% down payment pilot, big announcement that was made earlier this month. On February 3rd, the province announced this new program. And the particulars and the details are still coming out on that, but here's what we know so far. It allows qualifying first-time home buyers, households earning up to $200,000 to purchase homes under the $570,000 with just 2% down and no mortgage insurance. No mortgage insurance. That's significant. It lowers the barrier of entry. It potentially pulls renters off the sidelines. Is it going to flood the market overnight? No, but even modest activation at the entry level creates upward pressure. Entry-level demand fuels move-up demand, and that creates chain reactions. So the affordability gap is also narrowing, as the Bank of Canada is still sitting at 2.25%. And when you compare rent payments right now to mortgage payments, the gap is small. So you add in this new 2% pilot, and don't forget, we have the existing down payment assistance program. And financially, owning is looking more attractive again. And when that psychology shifts, markets will move. We also have something called the renewal wave that may come into effect and will have some sort of impact on the market right now. So the renewal wave, a lot of homeowners, they locked into historically low rates in 2021. Those 5-year terms are starting to renew. Now, some people worry this creates distressed inventory, but here's the thing. With 1.9 months of supply, even if renewal pressure adds listings, demand is strong enough to absorb it. So we are not sitting on surplus inventory. We are sitting on a shortage. And the big picture here, let's just zoom out a little bit. The big picture here, there was a 2024-2027 HRM Municipal Housing Needs Report that suggests Halifax will need 52,000 new housing units by 2027 and 77,000 by 2032. And that includes an existing shortage of about 17,000 units. If construction continues at its current pace, projections show that shortage growing to about 31,000 by 2027 and 35,000 by 2032. That is not a small gap, I think everybody would agree. And that's structural underbuilding. And structural shortages create long-term price support. Here's a couple of other interesting facts too. January, we had 751 new listings, 727 firm sales, and we had 686 conditional sales. On paper, new listings slightly outpaced firm sales. But when you include conditionals, homes that are effectively sold pending financing or inspections, the true available inventory is much lower. So while headlines might say listings are rising, the absorption rate tells a different story. Homes are moving. And here's a simple rule of thumb in real estate. If supply stays below 3 months, prices historically trend upward. And we are at 1.9 months, as I've already mentioned. Mathematically, just pure math, that shields us from a crash scenario. Could we see pockets of softness? Yes, absolutely. Could certain price bands move a little bit slower? Absolutely. Once we get above that $600,000 price point, we do start to see a little bit more of a balanced market, and inventory will move a little bit slower. But like a broad market collapse requires oversupply, and we just don't have that. So this spring and summer, I've got some advice for both sellers and buyers here. For sellers, if you're considering listing this year, timing matters. Right now, you're operating in scarcity. As we move deeper into spring, more inventory may come online, particularly from that renewal cycle. Listing before the late spring wave allows you to capitalize on current tight supply. In a 1.9 month market, well-priced homes still move decisively. And for buyers, if you're waiting for a dramatic price drop, the data doesn't currently support that expectation. So what we are likely to see is just modest upward pressure into late spring and summer. Waiting, it could cost you another 3 to 5%. That's just based on historical trends. But smart buying, it still wins. Negotiation is possible. Yes, negotiation is very possible. It's very real in this market. Inspection clauses, financing conditions, all of that is the accepted norm. It's back to business as usual since a few years ago. It's competitive at certain price bands, but it's rational. And the bottom line, Halifax isn't overheated. It isn't collapsing. Yes, it's structurally undersupplied, and we're in a seasonal cooling right now, but the fundamentals suggest stability with upward bias as we approach spring. With inventory at 1.9 months supply, the average price at $620,000, 97% sale to list ratio, new buyer incentives entering the market, and long-term supply deficits ahead. That's the math. Simple. and math doesn't get emotional. So if you're thinking of selling this spring, if you're thinking, I don't think you're sinking. If you're thinking about selling this spring, you may actually want to be listing before spring. And if you're thinking about buying, waiting for the headlines to confirm the market has moved could cost you that 3 to 5%. It's never too early to think about the future, but timing can absolutely impact your outcome. And that's the Great Scott Report for today. If you have any questions about this and what this means for your specific situation, buying, selling, renewing, don't be afraid. Send them to info@greatscotthomes.com because sometimes the Great Scott knows. So throughout this episode, don't forget to email us in with your questions. We'll answer them on the air. Stay tuned, because coming up next, we've got the Great Scott Spotlight with the owners of Scotia Cycle. Sit tight and we'll be right back with you.